Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. Today, I am talking about charitable donations. Okay. So with the Tax Cuts and Jobs Act, also known as tax reform, one of the things that was kind of put on the chopping block, but not, was charitable deductions. Charitable deductions are still allowed. However, with the doubling of the standard deduction, more people will not be able to really get any additional tax advantage with charitable donations. Okay. So if you are single, your standard deduction is now $12,000. If you're married, your standard deduction is $24,000 as married filing jointly. If you are our head of household, it is $18,000. Okay. So with that increase in the standard deduction and the decrease of, the Schedule A itemized deductions, with a lot of those that went away, the unreimbursed employee expenses went away, with the limitation of the state and local tax deduction to $10,000, a lot fewer people will be itemizing. And so one of the concerns with charitable organizations was that the donations would drop because people would no longer have a tax incentive to donate to charitable organizations. Now, I will tell you this tax reform will definitely tell you if people are donating because this is some to a cause they believed in, or if they're donating just because they want to get a tax deduction, because we're about to see what's going to happen because the rubber is about to meet the road. But one of the things that is going around on the tax streets is that tax professionals are advising their clients to bundle their tax deductions. And what that means is that, let's say that you give $10,000 a year to your church. Well, instead of you giving $10,000 a year to your church, you bundle that. You wait until, maybe 3 years. If you're married filing jointly, you wait 3 years and then donate $30,000. Okay. It's the same amount. It's just one lump sum. Now, there is a limitation with your charitable deductions. So, before the Tax Cuts and Jobs Act, you could donate up to 50% of your adjusted gross income, and then the rest is carried over, I do believe, for 5 years. But after tax reform, it is now 60% of your adjusted gross income. So let me do some quick math. I didn't think about doing that. Kind of let you know what that looks like. So if your adjusted gross income, let's say, is $75,000, so you could donate up to $45,000 and get that tax deduction, that additional tax benefit. Anything over $45,000 would have to be carried over to the next year and carried forward for 5 years. So, but now the problem the problem that presents is for those charitable organizations, because if everybody decides, and we know that's not necessarily going to happen, but if everybody decides, okay, I'm going to wait and donate every 3 years or every 5 years, then really, for this first gap, this first, 3 years, 5 years, charitable organizations are going to be hurting, because people are saying, okay, well, I'll just set this money aside, perhaps in a saving account, a money market account, or whatever. And then once I have enough to exceed my standard deduction, then I will donate to that organization. Well, the organization still got to live. They still have to operate. So now what are people going to do? These organizations. So, it really depends on where you are. It's a giving as always a personal decision. Okay. So nobody can say, it's right or wrong. It's just going to tell you, if you're really in it to support this organization, or if you're in it for the tax deduction. Because if you decide to withhold your donations for 3 years or 5 years, whatever that looks like for you, that is operating income that charitable organization does not have, and are going to have to make do some kind of way. So, So it's just something that's out on the tax streets, and like I said, it might be for you in your planning, in your tax planning or what have you, to withhold your charitable donations until you exceed your standard deduction and then donate that one lump sum. But, and then again, it may not be, of course, it's like I said, it's always a personal decision, but for charitable organizations like churches, nonprofits, all that, they really depend on those dollars to be able to function and operate. This can be a really ugly thing. Okay. Like seriously. But if that is something that may be suitable for you, get with your tax professional to see, what that's going to look like for you so that you can make those plans and to be able to donate that money, at a later date versus, but through monthly giving and all of that. Like we donate monthly. So it just depends on, what's best for you and your family. Okay. So that's what's new on the tax streets. Thank you guys so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish. And when you tune in, you can come here to get your questions answered about your home business taxes. Have a great day, and I'll see y'all next time. Bye.